And what are some current pending tax proposals in nation's capital?
Oh, this is where it gets to be a little fun and scary. So right now, 1031 exchanges are, there's some proposals there. And a lot of people ask me continually, are they going to get rid of 1031 exchanges? Maybe one day, but that has been in law since 1921. And so currently, instead of eliminating the 1031 exchange, they have capped, or they're going to cap out if they accept the proposal. Each spouse, if you're married, it'll be $500,000 in capital gains per year per spouse that can be deferred.
I see.
And so if you have a $4 million building and you sell it and there's $2 million in gains, you will be able to defer $1 million, but you have to pay tax on the other $1 million.
Oh.
So they're going to cap how much you can defer in a year in 1031 exchanges. So that could be a great problem. I'm here in Silicon Valley where we can't even buy a porta potty for $500,000. There's a lot of capital gains. Another issue is that the estate tax, it's $12.92 million per spouse now. In the sunset clause from the 2017 Tax Act, it's supposed to drop to about $6 million per spouse, but they've proposed to drop it to $3.5 million. So a lot of people who have a lot of wealth, their kids are going to get hit with, they want to increase the tax rate from 40 to 45%, plus the state. They could be upwards of 60% goes out in anything over that exemption. That's another hit. And then the capital gains. This is where it's going to get really brutal. They want to take any gains over $1 million and tax it at 39.6%.
Wow.
Top rate right now is 20%. Now, one thing to understand is it's not just capital gains. If you take your income plus your capital gains, if it hits $1 million, then your capital gains is separated and taxed at 39.6%. That's almost double what it is now at 20%. And then the next bracket they proposed is 28%, still much higher. So that's going to be a problem. They've proposed to increase the net investment income tax, we know it as Obamacare, from 3.8% to 5%. And then for those of us in California, they've proposed 13.3% to be raised to 16.55%.
Right.
You add all that up, you could be paying over 60% in capital gains,
yeah,
plus depreciation recapture. So that's huge. And lastly, they've proposed to eliminate the step-up in basis. And that's significant. For those that don't understand that, if you buy a property for $200,000 and you sell for $1 million, you have $800,000 in capital gains,
right,
that you have to pay tax on. Well, right now, as the law applies, if you buy it for $200,000 and you pass away and it's worth $1 million, your beneficiaries get that step-up cost basis from $200,000 to $1 million. So if they sell immediately, there's little to no tax consequence. But they want to eliminate that. So that creates a whole lot of problems in the capital gains world, and a lot of fear and a lot of anxiety should these be approved.
Check the full episode on our YouTube channel and on Apple Podcast.